Good morning, ladies and gents. Good morning. Looks like we are good to go. How's everyone's week been so far? Hope everyone had a wonderful long weekend. Coming into yesterday, whew, what a market, eh? 3+% drop on Rust yesterday. Bearish engulfing forming on Apple in the pre-market here. On the 15. About to get a slight pullback, 30-minute bull flag confirmation, rejecting as of right now on SPX. Wow, Ford's got some big ranges to move. Ford is starting to look like a real nice short going from here. One hour head and shoulders potential. No, that wouldn't be right because it just broke neckline already. 4 hours head and shoulders potential. Let's draw this out. So for those of you that watched last week's video, I've been mentioning about Ford short potential on this new high above 25. And if you entered short on 25, you are looking pretty decent so far. But on this bounce, I'm thinking on this bounce, we're going to form a right shoulder. And then from there, that will be the real short coming in on Ford. All right, let's get into the let's get into the market first. So SPX is over 4 hour 8 right now. Give me one sec, guys. All right. So the real dog of the indexes is, of course, being Nas. Bear break under that must-hold trend line yesterday, and now we're seeing an immediate back test. Now this is a warning right here. On this back test, if we're gonna be seeing some decent bearish action today on Nas, that is a huge red flag. As of right now, we are back testing this trend line. Now let's zoom out to see where this trend line is drawn from. It's all the way from September 2020. Multiple bounces on this trend line, and as of yesterday, we have lost it. Closed under it. That is a first warning sign. And from here, we're going to need to see, same as if we were to play bull, we're going to need to see on the bear side the follow through today. But today is, in my opinion, it's the market is due for a bounce today. Ideally, the bull is going to want to see the bounce at least today. And with the bounce, then we're going to be watching for where it goes to. 8 hour. Okay, so we're getting close to the 8 hour 8. Bulls are trying to hold that 4 hour 8. Still 24 minutes to go. So let's discuss some key events or key losses of trend lines yesterday. Not only did NAS lose that must-hold trend line yesterday, when we look on the daily on SPX, there's been this lower trend line. There's two of them. White one is the white dash one is the warning trend line that we talked about, and then the solid green rising wedge lower trend line is the must-hold. Now following that is the blue, that's a GG warning, and then red is GG. So from here, what we're looking at is similar idea, but it's October instead of September on SPX. There's been 1, 2, 3, 4, 5 bounces on that lower trend line already. And from what we're seeing yesterday is a first close ever under that trend line. So that is a huge warning sign. A big warning sign. Now look at where the overnight market is bouncing from. We're bouncing straight from that GG warning trend line. And now we're going to be watching for that potential back test shortly after market open. So after this back test, 0.382 lining up with that lower trend line of the previous wedge, we're going to be watching for the reaction over there. And if we're seeing bears stepping up yet again from here, then we'll be potentially either going cash or start playing bearish. This is a head and shoulders follow through, neckline being right here. Neckline we had broke yesterday, and on this bounce, after the bounce, I would anticipate some sort of follow through on the bearish side. There's a lot of bear thesis out there. Now, one thing I don't like about this is the leading indicators are not lining up as of yet. Now, before getting to that, let's take a look at Russ as well as Dow. So Russ, significant bear break. Yesterday we closed right at the bottom of that key zone that must hold 1, 2, 3, 4, 5, 6, 7 bounces on this small key zone. Closed right on the bottom of it, and then overnight we lost it and saw a bounce coming up. We are a little bit extended on that daily. So today there's a potential for all of the indexes to form a reversal candle, which you'll be looking at either a doji or a spinning bottom, or a doji, or what is it called, a hammer. In which case, bull is going to need to see that follow through tomorrow. But first thing we're going to be watching regardless is going to be that trend line back test to see what exactly the reaction is going to look like. As for Dow, good morning, M. Good morning, Mary. Yeah, we'll take a look at those tickers. All right, so next one, let's take a look at Dow. Bouncing from the 0.786. This must-hold trend line has not been lost yet on Dow. Probably jar this a little bit better somehow. Let's see. I like it over here. So a slight loss over here. That's the only thing. 1, 2, 3, 4 bounces. Slight lost it here. Immediate buy up, and we're seeing a potential bounce from here. But regardless, it is a 0.786 that's bouncing from. On Dow today, we are looking at a bounce day. It's gonna have to see where the bounce goes to. Let's take a look at the leading indicators. So US dollars is bouncing up from that lower trend line of the previous channel. Slight loss, immediate buy up. US 10 years rejecting from just under the GP. What is this? Or is it within the GP? Oh no. broke over the 0.5, rejecting from just under the GP of the fib extension, low to the higher low. So depending on how you draw it, if you draw it to the bottom over here, we'll bring the GP a little bit higher, but I like it over here. So GP is right up ahead on the US 10-year. The leading indicators are not lining up for a huge bear play yet, but everything else, you know, the indexes itself with the key loss yesterday, I am thinking there's going to be more bearish side, and if that is the case, this pattern could work out. It's just going to be a little bit more dragged out now. VIX. So on VIX, the last time we saw a wedge, a pop over, a back test of the upper trend line, and then it was immediately shot up. Of course, this is pandemic that we were looking at, but this is a very similar idea: long-term wedge, pop over, back test of the upper trend line, and now we're going to be watching. Going forward, depending on how this bounce plays out, instead of watching, ultimately this 35 is still going to be the key price to watch. If we're to shoot up over the 35, there's potential for this kind of scenario to work out again. But on the shorter term now, what we'll be watching is a pop over 23, we'll call it 25, maybe between 23 to 25. Once we get over this, then there's a good chance that we could be seeing something like this making into new highs. So leading indicators, no, I wouldn't say it's oh wow, look at Bitcoin. I wouldn't say it's showing that there's gonna be a big bear play, but regardless, indexes are showing bearish actions coming in with the loss of must-hold zones. So keep an eye on that. Bitcoin, we are at the money line. This is gonna be a must-hold for the Bitcoin as well. Let's see if we're to move over here. Actually, that might make a little bit more sense. So we're at the money line of the short term, let's call that. But I'm going to redraw this to over here. See a bounce, a rejection, popped over, and an immediate back test with support on the trend line, and then another bounce. So I would say this is going to be the ultimate must hold for Bitcoin. Yeah, this trend line makes a lot more sense. The weekly trend line on Bitcoin. So we're coming up. We are a little bit extended on the weekly. Looking like there's potential to form a weekly bear flag formation before breaking down under this trend line. Now, what we can be looking at for Bitcoin is a little bit of a sideways action, you know, going like this before actually breaking. Regardless, looking at Bitcoin, it is still very bearish. So ultimately, from the top, there was a huge bear divergence that took a while to play out. Ultimately, we saw a drop with a huge lower wick from that 42,000, and then what happened was a weekly bear flag, and now confirming. So market still looks a bit bearish to me, even in this pre-market bounce. You know, the bounce from 11 p.m. By the way, there is a very noticeable trend that the bounces are starting at 11 p.m. reversals, at least, you know, regardless of whether it's a bounce or a reverse to the downside. But so the bounce has been decent since 11 p.m. and in the pre-market right now, looks like it's a little bit more bearish action. So this could be due to NAS already backtesting this must-hold trend line. As for SPX, that doesn't look right. Yeah, SPX has not backtested yet. But this is what I'll be watching today. 0.382, 8-hour 8, lower trend line of the rising wedge, the backtest of that. So ultimately, I think there's a little bit more upside to come. And then from there, we're going to have to watch for what the reaction is. Bounce looks okay. You know, we could be looking at something like this. All right, let's take a look at some tickers. First one we're going to look at is going to be the BA. Woo. Hey, I hope you're in. Mary Ann, are you in BA? This is an amazing chart. You know, this bull divergence, strong bull divergence. Look at the RSI. We made lower prices on here, and the RSI was huge, much bigger, going from 26 to 35. So anyways, strong bull divergence. We saw a decent, very nice follow through so far. Now we are having trouble with this. Yeah, I would say this is the must break trend line now. On the break of this, so on the shorter time frame, looking at this is a big move off the bottom. and negating market weakness as well. So it's a very nice ticker to be playing as of right now. 24% bounce from that bottom. So I will be thinking, no, I am thinking that there's going to be a daily higher low coming in, maybe a back test of this previous upper trend line where we saw about 6 rejections from this upper trend line. Ideally, what we want to see, we are clearly having trouble with this must break trend line. So ideally, what we want to see is this right? Nope. So it's a little bit higher now. There, step it up a little bit maybe, and then this not only is going to help cool off the chart, it's going to help prepare for that next leg. But ultimately, this is what I'm looking at. Coming back to back test this 0.382. Depending on how long it's going to take, if it's going to take longer, we could be backtesting this triple confluence area, 0.5 lining up with the previous support resistance, lining up with that upper trend line. So a couple possible scenarios. It's either going to be the 0.382 next leg up, or it's going to be, oh, okay, my computer's lagging. It's going to be a little bit longer, dragged out. That would actually make a potential higher bull break. Yeah, actually, that would look very nice. So we'll draw it to there for now. Just to get the idea, you know. I would say this is... Hey? I would say this second scenario is the... What? What is going on? Is the less likely scenario. Did they change something so I can't draw this anymore? That's weird. Alright. Let's change it from here then. Yeah, so first possible scenario, second possible scenario, based on the rejection, you know, we're gonna have to see today's action looking like it's gapping up right now. Yes, you are. Amazing. Thank you for watching the video. Don't thank me. You're the one who pulled the trigger on it. Congrats, Mary. Nice work. So be careful on BA as long as this does not break, and we are a little bit extended on the daily as well. If you look on the daily, this is a very much a shooting star. It's not as scary because shooting star, you know, the worst is if the overall candle is red. So yesterday was still green, but this is potential reversal candle. Earnings is coming up as well on January 26th. So if you got in anywhere from here, just make sure you take some profits off. You don't want to be screwed on this next leg down, especially if you're playing options. You know, it is already seeing a little bit of a sideways action. If you got in anywhere from here, you should see a decent profit. Now, don't let it bleed out. Make sure to take some profits, at least. A couple top plays that for me over today, tomorrow will be BBIG as well as F, and there will be bear plays. Now looking at this BBIG, what is that short-term trend line? Oh, still rejecting. Okay. Looking at this BBIG, there is that short-term trend line that we just looked at. Hourly trend line, and the daily is extended. Yesterday I was looking for that reversal candle, whether it's going to be a doji or a shooting star, but the chart is still relatively strong, but is looking like a very much high possibility of volume climax coming up. Should be either yesterday or today. We are extended on the daily. We did close over that key zone yesterday. So today's going to be key for me to watch on BBIG. On the reversal, you know, this could, I would anticipate at least a drop to this previous resistance of 3.28. That might be too much to ask for. It might just be like it might actually be over here instead. 3.56. But that's what I'm looking at for the daily higher low. If this is a true reversal on the daily, then we're going to need to see a daily higher low, and it's going to be somewhere around there based on previous resistance. And if we're to draw a fib, GP line separating between the two zones as well. So makes sense that this is the top yesterday. Gonna have to see the reversal today to confirm. And the other one for my personal top play is going to be Ford, looking at potential for a 4-hour or daily head and shoulders formation. So there's going to be a little bit more sideways action, maybe a little bit pop here, but it is decreasing bull volume that we're seeing. There is a daily bear divergence on it. There is a weekly, or there was a weekly bear divergence, maybe not anymore. Monthly is overbought. Monthly is extremely extended on that monthly 8. So when we look at this chart, this is, whew, oh my goodness, 35% extended on that monthly from the monthly 8. Jesus. And monthly is overbought. Regardless, we'll not be entering both on this ticker, even though the chart is one of the strongest charts out there. Daily bull flag confirmation, daily bull flag, and then tried to confirm and got affected by the market, huge upper wick. So, and then there's a bullish engulfing candlestick, lack of follow through. These are double red flags to me. Now, for those of you that watched last week's video, I discussed about Ford, if we're to make a new high above the 25, this is 24.95, yeah, above 25, that could be a very nice short entry, first entry. But it may take a little bit of time, and this is exactly what we're seeing. So there is, if we were to do like a common short from here, you would be still green already. But as for options, it might be a little bit longer. You know, we're gonna need to see this what the right shoulder, ideally for bear plays. We're gonna want to see that right shoulder for a very nice follow through to the downside. But Ford is very nice, bouncing up in the pre-market right now. It's gonna be one of my top plays as well for bearish play. So market is still looking slightly bearish. It's nice bounce, but NAS is okay. NAS is looking like it's the weakest again in the pre-market. Okay, maybe not. No, it is. Big real body. Whereas Russ is a doji so far. And this 30-minute chart, of course, and this is a smaller body. And Dow is actually green. So NAS is looking like it's remaining the weakest of the four. Keep in mind, there is sector rotation going on. I do believe it's still going on from NAS, Russ going into Dow. Let's take a look at GM. Speaking of GM, have you guys seen GME lately? GME and AMC? Man, whenever I crawl, whether it was Twitter or what's that, Facebook, people are always so bullish on GME until GME, AMC, and those meme stocks until it breaks down. My goodness. So look at this. This is a very clear, key break yesterday on GME. Maybe not yesterday. What's yesterday? Tuesday? Friday. Yeah, Friday, key break on GME. Huge long-term wedge, bull break, decent follow through. Ultimately, it was a double top, and from there we saw a decent bearish action coming in. This is now a very, very clear must break area for GME, but because we are trending down, I'm thinking that we're gonna have to move this alert down to about 130 ultimately, eventually at least. As of right now, it is still staying just above 160. We saw multiple rejections from that area. Same with AMC, key break on Friday. Oh, nope, almost key break on Friday. Key break yesterday down to the downside. 1-to-1 extension target from back here, the high to the low to the lower high. 1-to-1 extension is marking at 1513. Does that line up with any previous support resistance? No, it does not. Or maybe just, actually it does. Double rejection before an actual pop. 1450. It makes sense because the extension targets generally get a little bit wick just over it, over or under. So with this being the bearish side of the extension target, I can't see this wicking from 1450. That would actually be a very nice play. If we get to 1450 on AMC, that could be a very nice bounce play on AMC at the very minimal a bounce. As right now, it looks like there is a daily channel potential forming. Somewhere around here. Yeah, looking like there's a daily channel potential. All right, so that's AMC. Let's take a look at GME. Sorry for the delay. GME. Good morning, miner. Hey, long time no see. How was your holidays? Long time no see, man. Ever since what was it, mid-December? Did you go somewhere? GME. Okay. Oh, wait, no, sorry, GM. Ooh, looks like a chart that I've never charted before. All right, let's do this together, guys. Let's chart a brand new chart. Does not happen too often nowadays. Maybe I should go back to deleting some charts and redoing it. So first thing I like to do always is draw a money line. So you would go from the low of pandemic, because it's so recent. It's so easy to draw this money line. The low of pandemic generally to a ideally recent higher low kind of a thing. There's probably two trend lines, to be honest, but basing on this is the money line, this is the must hold money line. Actually, maybe I like it over here, but there is a break under, just because there's multiple wicks over here, but I'm gonna leave it over here for now. Actually, you know what, because there is supports from up here, we could, oh nope, what you could do is, this makes sense. Oh, it's a couple, 3 closes under, some bounces. Another bounce. I don't like it as much. It is from that low. Yeah, we'll leave there. So this is the must hold for GM. That's why we draw money line first. Makes it a lot easier. Let's do a key zone from here. Oh. Draw it to the real body. Come on, TradingView. No, not that real body. This one. Okay. And then the top of the real body, so the actual close of that candle. And then there is should be a key zone over here too. Yeah, it looks like it's from the close of this one to the high with multiple rejections over there. I don't like that one as much. It's so big. Let's draw it to the bottom over here. This actually makes it a little bit more sense. There. Much better. So wick, close over, immediately sold off. Close over, immediately sold off again. Multiple wicks over here, multiple bounces. So that's a very clear key zone. Next one up. Personally, my preference is I like to draw at least 3 key zones, just because, you know, especially in this bear market. Nice bullish coming in the market right now. In this bearish market, you want to make sure that you have your key zones prepared to the downside in case. So let's say, you know, GM, if it does lose this must support area, yeah, this will be the first bounce, back test of this support trend line, and then I can see this leg, another leg down kind of a thing. But I'm not saying that's the scenario, but just give me 1 sec. Let's take a look at what the chart looks like. So far it's still bullish. Maybe not so much a key zone up there. Regardless, the all-time high must break now is somewhere around 60 in this zone. This is bugging me. This is definitely a key zone up here. Somewhere around there. Yeah, rejection. Popped over, immediately sold off. Another rejection here. This makes sense. And then there's a middle. support resistance, very clear, multiple rejections over here, another one, and then slight support, just losing it today. So that's a little bit of red flag on GM, General Motor. Oh, almost had head and shoulders formation. Almost. So this is left shoulder, this is head, and this is almost a shoulder, but they popped it over. There is a daily bear divergence now, very clear, decreasing RSI. Something like that. There is a decreasing RSI, so something to note. Every time that it's coming back down, is seeing some strong bearish action. So there is a potential for actually losing this support. But these two are now the must hold. I guess you could call this. First one is a warning trend line, and then it's the GG trend line on GM. If you were in bearish, congrats. No, I'm not seeing any reason to sell yet. One thing I don't like about the chart is it doesn't seem to respect the ADMA as much. See how there's close under, bought up, close under, bought up again. You might have to consider, maybe consider changing this one to 9 EMA. It might work out a little bit better. Yeah, slight close under it again. Looking like a chart that might respect the 9 EMA more so than the 8 at least. But overall, the chart. Technically, this is a bear divergence, no follow through, and this is now another bear divergence playing out. And there is a potential for head and shoulders on before the actual bearish play comes to play out. But yeah, GME, you're at that support. Nice bottom fish area coming up. Whether it's gonna be this first trend line or the second trend line. Next one, ISPC, back to 100%. You were? I'm sorry to hear that. Hey, did you keep your sense of taste, Miner? ISPC. You're back at 100%. So I'll see you in the chat room. What is this chart? Jeez. Looks like, reminds me of meme, but even worse. So meme, at least they held up for quite a while. This is just a pop, a huge pop regardless. Huge pop, 510% pop, and now just bleeding all the way down. There is a descending wedge. Where's that upper trend line? So somewhere around here, that's a descending wedge. Wow. All-time low is already coming up. Jeez. So this is a support. 537. Only seeing one, maybe. Okay, maybe three. Three closes under. But this is a ideal to hold support before all-time lows at 475. Would not be recommending touching this. You know, there can be a bottom fish play kind of a thing around this area between 537 and 475. But it is still clear guide down from that 88. Look at every single time it touches the 88. This is try popping over it. Huge upper wick, rejection. Another one over, another two over here. Big bearish volume. Yeah, bottom fish over here. That's about it. But aside from that, you know, this is probably going to be a little bit more slower downside because of that lower trend line, or it could be a fake out, a breakdown fake out. That actually would be more ideal for a bottom fish play. You want to see that breakdown fake out more, it'll be more ideal than sideways grinding. Slow grind, never good for a chart. Nas just made a 5-minute lower high. GM. Hey, we actually talked about GME. Boeing. And check our chat room. Disney. A long time since we looked at that one too. Gap down. This must have been news. Gap down, sell off, huge lower wick. Oh yeah, it's been a long time since we looked at this. Chart is very bearish, hey? So we lost this GP. Where'd it go? So we lost this GP. Did we bounce from the 0.786? Nope. Did we bounce from platinum zone? Okay, so we bounced from the platinum zone. 1-to-1 extension was almost reached. Wait, no, this is not 1-to-1. This is 1 to 1.272 extension is almost reached. Daily trend has already been reversed. Lower high, higher low, higher high. This gap down does not look good though. Earnings coming up on February 9th. So just under a month out, 20 days, 21 days. Based on the lower wick, it's actually looking decent. It went, but then went gap fill. Tried gap fill yesterday and then it got rejected. Let's see where it's bouncing from. It's trying to hold that GP. That's what it is. No, already lost that. Okay. Yeah, so Disney, based on this gap down, trying to sell off a little bit more. Key to break will be on the shorter term 153.13. On the break of this, we're looking at up at gap fill at the very least, but the very key to the overall must break is 158.41, where we saw previous support, couple of supports here, multiple rejections, unable to close over it. What happened to my alert on it? Ultimately, I'm looking at a potential for range bound. Okay, so previous rejection, support over here. Yeah, I'm looking at potential for a range bound in between 147.68 and 158.41. So if we were to come back down, you know, the 148 does line up with the 0.786. A little bit of sideways action into earnings. So it's not exactly an ideal chart. On the break of either one of these two areas, a clear break with close over, then that'll be the play. So there's a huge gap left up here. Once we break over this 158, I would feel a lot more confident playing this gap fill. Speaking of, let's set an alert on that. I'll do an early alert. Ideally, you want to see a close over 160. A close over at 160 would be the most ideal, but I'm setting my alert right now at 158.62 just for an early alert. All right, so that's Disney. For those of you that missed it, we're gonna quickly do a recap as usual on the market. So with the market, yesterday is a very, very, very key bear break, and we're talking about the four trend lines here. It's looking a little bit messy, but the four key trend lines to know are the white dash, the wedge lower trend line, the warning line, and then the GG line. So this is a initial warning line, and then the green trend line of this long-term lower wedge starting from October of 2020. 2020. So it's over 1 year of trend line. This was a must hold on this rising wedge lower trend line, and then the blue is a GG warning sign where we saw a bounce from last night, and then the red is the GG line. So with this GG warning line, we saw 1, 2, 3. Now yesterday or earlier overnight last night was the fourth bounce from this line so far, but we're gonna need to see a little bit more follow through. So far bears are still in control, and we are looking for this back test of that trend line, that lower trend line of the wedge right about 46.23, lining up with 0.382. Watching for a reaction. Hey, we've actually got the close over the 4-hour 8, so that's good. Hey, at least that's one step, first step for the bulls. Close over the 4-hour 8. 8-hour 8 is going to be course, the key. Back here, saw a rejection. Pop over. Did we reject from the 88? Oh, it was a fake out. It was a fake out. So there's a high potential for this head and shoulder pattern to play out now. But the thing is, I don't like with this bear play is the leading indicators are not lining up. US dollar is not popped yet. 10 years, 10 years obviously has been on a very, very bullish run so far. And that's bad for small caps. Supposedly there's been a recent correlation with Bitcoin and the 10 years as well, just something to note. As 10 years pop, it's an inverse correlation, so Bitcoin would be dropping. Yesterday as well, Nas did lose this must hold trend line as well, so that is very key to note. Trend lines being lost at the same time, that is a big red warning sign for me. Now looking at this, 1, 2, 3, 4, 5 bounces on this must hold trend line already, money line, whichever one you want to call it. Actually, it's not technically money line, but yeah. Closed under it yesterday. One thing to note as well is I was looking at this morning. We are due for a bounce for sure. A lot of charts are at, especially tech-wise, we are at that monthly 8. Looking at Google, looking at Microsoft, I believe as well, and Apple? No, Apple was not. So Microsoft, Google, Nas, they're all at the monthly 8. Should see a bounce over the next few days, ideally. We're gonna have to watch for that back test first. But so one thing that I was looking at this morning is every single time that we came to the monthly 8, that's not a green candle. So this last one was a green candle. This last one over here was green candle. This one was green candle as well. Every single time that we came to the monthly 8, that's not a green candle. Multiple examples actually. So this one will be the first one. Next month followed by bearish action. This is pandemic, of course. Okay, never mind. There's one negate. No, one of them does not apply for the theory. This one followed by further bearish action. Even this one. So depending on how strong the bounce is, next month, if it's a strong bounce. Oh my goodness, bounce. I would anticipate the next month to be a little bit more bearish again. Same with over here. Just something to note. Nas trying to go for a 5-minute lower low right now. Alright, so that's it for today's video. Looks like just make sure, consider either being full cash or waiting for that bearish play. It's the only thing I'm thinking. The key losses on SPX as well as NAS, that now increases the potential of what we were looking at before, this 200 EMA. Oh, that is low. Oh wait, sorry, this is monthly. Daily 200 EMA. Even if we were to play bearish from here, you're looking at roughly about 10% drop maybe. I don't know about, people are saying 20% drop, but regardless, this is what we're looking at. We haven't touched the 200 EMA for over a year, ever since pandemic. So now with this pattern breaking bear, that definitely increases the chance of that happening. 10% pullback. Alright, so that's it for today's video. Hope you guys enjoy the content. If you know anyone that may benefit from the content we provide, please consider sharing our channel with them. Thank you for tuning in. I will see you guys in the next video.